Welcome everybody. And we solved problems on gratuity. We understood the concepts of salary. Now let us further deep dive into more retirement benefits. After you retire, if you get monthly pension, you will be very happy, right? A peaceful retirement life. But government is not satisfied. Government says if you are getting pension, we also want your pension, and pension is taxable. So how it is taxable? Let us discuss now. There are two types of pension. Actually, pension is monthly payment, correct? This is what all of us know. We can use the word uncommuted pension for it. So pension is a retirement benefit. After retirement you normally get it on a monthly basis, and that we call it as uncommuted pension. When it comes to uncommuted pension, it is taxable to all employees, whether it is government employee or whether it is non-government employee. Uncommuted pension, monthly pension is fully taxable to all. Now, you may be saying, sir, how many times you are repeating? These are new terms for all of you, correct? Uncommuted is a new term. So I am repeating it twice, thrice so that it is stored in your mind. Chalo, come on, remember. Uncommuted means not lump sum, means monthly pension. It is taxable to all. Whether you are government employee, non-government employee, you get uncommuted pension, fully taxable. But if it is a commuted pension, commuted means lump sum pension. Commuted pension means what? Lump sum pension. Then they ask you a simple question. Are you a government employee? If the answer is yes, you receive commuted pension, that is lump sum pension, and you are a government employee. It is fully exempt. That means not taxable. So lump sum pension, commuted pension received by government employee is fully exempt. Second concept. If suppose non-government employee receives commuted pension, lump sum pension, so what to do? Ask a simple question. That is the employee receiving gratuity also, or employee is only receiving commuted pension but there is no gratuity received? So if suppose he is also receiving gratuity, then only 1/3 of full value of pension is exempt. What I said, if he is only receiving commuted pension and he is also receiving gratuity, then 1/3 of full value of pension, that is commuted pension received, is exempt. Now, suppose example, if he is not receiving gratuity, then he is only receiving commuted pension, no gratuity, then 1/2 of the full value of pension is exempt. Okay, balance is taxable. Now I only repeated or uttered the words which are there on the screen. Don't worry, I'll practically make you understand with a story. Let's start with a story. So what happened? You worked in a company. Now you are retiring, but your son's marriage is there. Your daughter's marriage is there. Now you are going to get monthly 50,000 pension till your retirement. You went to the employer and asked, sir, rather than giving me monthly 50,000 pension, you give only 20,000 pension, sir. That is sufficient for us. But balance 30,000, you commute, make it a lump sum amount and give it to me. So employer did all the mathematical calculations, whatever are required, and he calculated that lump sum pension you are going to get around some amount. Suppose you are a government employee, then that lump sum is fully exempt. But if you are a non-government employee, then what they said, that if you are receiving gratuity, then 1/3 of full value of pension is exempt. Not receiving gratuity, 1/2 of full value of pension is exempt. Now what is this logic? I'll tell you. Now a small example which is there on the screen for you to understand. Very easy numbers so that you should understand. Okay. When commutation was done, you requested the employer, in your questions also like this it will come, that please commute my 60% pension. So I want to surrender, sacrifice 60% so that I can get lump sum amount. So your 60% when you surrendered, you got it in lump sum, employer calculated, you got 60,000 rupees. Now tell me, if 60,000 you received by surrendering 60% of your pension, how much is 100%? Tell me. Okay, for 60,000, if it is 60%, for 100%, how much? So 60,000 into 100 by 60. 60,000 into 100 by 60. So it will come to around 1 lakh rupees. So this way you should calculate full value of commuted pension. So if suppose 100% of the pension is commuted, how much you would have got? That is full value of commuted pension. Now when they are telling 1/3 of full value or 1/2 of full value of commuted pension is exempt, they are simply telling that 1/3 of this 1 lakh, 1/2 of this 1 lakh, right? So when you multiply 1/3, 1/2, don't multiply with actual amount received. You multiply with full value of pension. If 100% of the pension you received in one shot, how much it would be? And that you have to actually, what you should do? You should calculate. Okay. Now what they said, 1/3 is exempt. 1/3 of full value of pension is exempt if you are actually receiving gratuity. Okay. That means first thing, you have to write what is your pension received, commuted pension received. From that, you should deduct the exempted portion, that is 1/3 of full value of pension, and then balance pension is fully taxable. Balance pension is fully taxable. Similarly, if you are not receiving gratuity, you will again take what is commuted pension received minus 1/2 of full value of pension, and balance is taxable. This is how we will do in the questions. Now, if suppose I commuted 60% of the pension, monthly I am getting suppose 5,000 rupees pension, and I commuted 60% of my pension. So how much I sacrificed? 3,000 rupees, right? 5,000 into 60% comes to 3,000. So 3,000 is sacrifice. Correct? But 2,000 still I am going to get, correct? That 2,000 is uncommuted monthly pension which I am going to get. So that is anyhow taxable. Okay? This way you should be able to interpret the concepts. Let me repeat for all of you again. Right? We are talking about pension. Pension means monthly payment. So in simple language, pension is most of the times uncommuted pension, monthly pension. Uncommuted means not lump sum. That means monthly. And when it is monthly pension, it is fully taxable. Monthly pension is fully taxable. Uncommuted pension is fully taxable. Okay? Right. Now, if it is commuted pension, lump sum pension, then government employee exempt. For government employee fully exempt. If you are non-government employee, ask a question. Is the employee receiving gratuity also? Or is the employee not receiving gratuity? We are not talking about Gratuity Act, right? Payment of Gratuity Act 1972. We are not talking about that. We are only talking about, is he receiving gratuity? If yes, then only 1/3 of commuted pension exempt. If not receiving gratuity, then 1/2 of full value of commuted pension is exempt. When they say this is exempt, that means from the amount received, if you deduct this exempted portion, balance becomes taxable. This way you should understand. And how to calculate full value of commuted pension? They will tell 60% commuted, you got 60,000. So 100% how much? That you should calculate. And full value of pension, commuted pension, is always 100% of the amount.